one of the things you wrote here. It says short SPX vol, long names. Okay. Now, first of all, for when you say long names, you don't mean long the actual deltas. You mean long the volatility of individual names. Is that correct?
That's correct.
Okay.
That's correct.
So whenever the street is short, wherever the street is short, own it. It's illiquid and reflexivity being this on the side of the street positioning is a liability. It's that simple. That's what you wrote. Now, I was curious about this. So I understand being short vol, you can do it in a variety of different ways, but most people would understand that. And in terms of being long vols, you can go out and get long volatility in individual names. How do you go about doing this in enough stocks, and how do you figure out your ratios? And obviously there's some secret sauce here, but just give us kind of some ideas of things that people that might be interested in trying this on their own should be thinking about.
Well, without diving too deep, and again, there is some secret sauce in here. I can't go telling everybody how I do everything.
No, understood. We don't expect that.
But look, from 30,000 feet, we have a model that we've developed over many years that allows us to relate volatilities from one product to the other. Some people do, normalize in terms of Vega. Some people do it in terms of theta, right? We have our own process of doing that. I won't get into the details of how we do it, but, we normalize, volatility one versus the other, and we create a basket of implied volatility in names where we feel there is a significant opportunity given street positioning and given the pricing that currently exists in that implied volatility. And we create that basket. We own it. We are very opportunistic in how we create that basket, right? We try and maintain some level of risk neutrality. Are we doing it as straight dispersion, meaning we're covering all of our risks, right, and just doing names versus ats? No.
Okay.
We're being very careful about our exposure and our net kind of Vega and vol and delta exposure across products, but we are taking some tactical bets there and creating a diversified basket that we ultimately feel will have a much better outcome.
So in some ways, you're using the same ideas that you're applying about dealer positioning on S&P that you don't want to own the stuff that everybody owns, and you're taking it on the opposite. You obviously wouldn't want to be shorting the stuff that everybody is short.
Correct.
Or in the opposite, you want to own individual names. You want to own almost the expensive stuff that everyone in individual names. You want to own the volatility that might appear expensive, but the reality is that everybody is all the dealers are short that volatility, so it might not be as expensive as it looks.
That's exactly right.
Okay.